So it's time for us to flip the dosha, okay? First of all, we will discuss something about the old slab rates, okay? We'll complete the old slab rates, then we will be covering the new slab rate, okay? So listen friends, listen, this is quite simple. The slab rate applicable for assessment year 24-25, that means for the PY 23-24 is like this. Yeah, masala dosa, okay, masala podla, okay, yeah. So if you are an individual, HUF, AOP, BOI, AJP. Repeat with me. If you are individual, HUF, AOP, BOI, AJP. Alright? Then in that case, how much is your normal slab rate? That's what we are about to discuss. So up to 2,50,000, as you all know, your tax liability will be nil. If his total income is up to 2,50,000, his tax liability shall be zero. You don't have to pay any tax liability. This is called as what? Basic exemption limit. Now from 2,50,000 to 5 lakh, how much is the rate of tax? Hello, how much is the rate of tax? 5%. Then from 5 to 10, how much is the rate of tax? 20%. 10 above, how much is the rate of tax? 30%. This is also called as old slab rates. Are you with me? Why? Because it is old. Okay, we have a new slab rate as well. So we normally call it as old slab rates. Now, if you are a senior citizen as well as a resident individual, that means having an age of 60 years or more, then your basic exemption limit will start from 3 lakh. 3 to 5, 5%. 5 to 10, 20%. 10 above, 30%. Are you all with me? Are you all with me? Are you in the hangover of lunch? You are about to say yes, okay, okay. Naam appadi maati ketute irukke, okay. Yeah. So, masala dosha ella ange irukattu. Yes. So, friends, forget about lunch and forget about break. Only think about results. Okay, okay. Think about income tax. Okay. Super irukke, okay. Nalla irukke. Next time, namakku adu set aakala. Okay. So, think about income tax only. Now friends, listen. Moving on to the next one. You have to be a resident senior citizen to enjoy the extended basic exemption limit of 3 lakh. What if you are a non-resident senior citizen? What will happen? Non-resident senior citizen, only 2,50,000 will be your basic exemption limit. Now moving on to the next case, that is a resident super senior citizen. What is super senior? Tata. Okay, Tata na 80 years or more. Indian Tata na 100 plus da. That's exceptional case, okay. That's one exceptional case. This is the normal Tata, okay. So if you are at the age of 80 years or more, then your basic exemption limit is up to 5 lakhs, nil. 5 to 10, 20%, and 10 above, 30%. Are you with me? Are you with me? Now friends, imagine, say you are celebrating your, say for example, you are celebrating your 60th birthday on 1st April 2020. Yeah. So you are celebrating your 60th birthday on 1st April 2024. Are you all listening? You are celebrating your 60th birthday on 1st April 2024. Say in the PY 23-24, what's your age? In PY 23-24, what's your age? 59. 29. யாரடா அது பிரியாணி சாப்பிட்ருக்கியா லஞ்சுக்கு பிரியாணியா ஏஜ் ஊ ஏஜ் எதுக்குடா எனக்கு ஓகே ஸோ லிசன் இதான் பிரியாணி ஹேங் ஓவர் இல்லை பிரியாணி கூட ஏதாவது நான் தண்ணி தான் ஓகே ஐ எம் ஆஸ்கிங் யூ அபவுட் தண்ணி நார்மல் தண்ணிடா ஓகே எந்த மாதிரி தண்ணி குடிச்சாச்சு நார்மல் வாட்டரா ஓகே ஓகே பரவாயில்ல. So listen, say your 60th birthday is on 1st April 2024. That means your age in 23-24 is how much? 59 only. Are you with me? Are you with me? In the PY 23-24, can you, sir, rocked students shocked. Oh, ennada idu? You are a script writer, Ali? Are you a punch dialogue writer? Adu super irukku, nalla panja irukku. Ali, where are you from? Ali, where are you from? Huh? Attipattiya. Chennai da. Okay, okay, super. All right, listen. So the point is, you are. Hey, let me complete this da. Konja neram on the 59 la irukke. Let me make it 60. Okay. Now listen. Your age in the year 23-24 is 59 only. So my question is, can you claim the benefit of 3 lakh basic exemption limit in 23-24? Can you claim the benefit of 3 lakh exemption in the year 23-24? Normally, if you think no. Why? Because in 23-24, your age is 59 only. But what department say? If you are celebrating your 60th birthday on the first day of AY. So PY is 23-24, AY means 24-25. AY's first day means 1st April 2024. If you are celebrating your 60th birthday on the or 80th birthday on the first day of AY, then you can take the extended basic exemption limit in that respective AY. Respective AY means 24-25 AY. That is for 23-24 PY. Are you with me? So study it like this. If your 60th or 80th birthday is on the 1st April 2024, you can take the extended basic exemption limit in 23-24 itself. Are you with me? That's this note. Can you read this note? As per the CBDT circular, an individual whose 60th or 80th birthday is on 1st April of assessment year would be treated as having attained the age of 60 or 80 in the previous year itself. You can consider that your age as 60 or 80 in the PY itself. So that's what they are saying. Now we will discuss the rate of taxes for companies. Okay, we will discuss the rate of tax for companies. So you tell me, you can divide a company into two. Are you all listening? You can divide a company into two. Number one, domestic company, and number two, other than domestic company. You tell me, what is domestic company? For the time being, incorporated as per Companies Act 2013 or incorporated as per any law in India is considered as domestic company. So what is the rate of tax for a domestic company? Normal rate is 30%. But companies have got a reduction in their basic tax liability subject to a condition. And what is that condition? If turnover or gross receipts in previous year 21-22 is less than or equal to 400 crore, then rate of tax shall be 25%. Listen, this is a little bit tricky. Say for example, for a company, relevant PY is say 23-24. Relevant PY is what? 23-24. So 23-24, you are a domestic company. You are a domestic company. DC means domestic company. What is the basic tax liability for you? First, you check the turnover in the year 21-22. Are you with me? First, you go check the turnover of that particular company in the year 21-22. If that turnover is less than or equal to 400 crores, then for all subsequent years, rate of tax shall be only 25%. In other case, it will be 30%. In other case means if your turnover in 21-22 exceeds 400 crores, for all subsequent years, your rate of tax shall be at 30%. This 21-22 is fixed. Unless otherwise there is a change. And actually every year they change that. Are you with me? For your 23-24 PY, the fixed year is 21-22. Are you all with me? Are you all with me? Point is very simple. Now let me ask you one more doubt. What if in 23-24 only I started my business? Then what is my rate of tax? I started my business only in 23-24. Then what is my rate of tax? 25. Why? Because my turnover in 21-22 is 0. Because I don't have any business. Are you with me? Are you with me? So my turnover in 21-22 is only 0. So I can take the benefit of 25% if I am a new company. Are you all with me? Are you all with me? What would be considered if birthday is between the financial year? If birthday is between the financial year, then say for example, I'm celebrating my birthday on 10th March 2024. Then in that PY itself, I attained 60. I can take the benefit of extended basic exemption limit for that PY. Got it? So this is how you have to consider. Is that point clear? Happy birthday, Shakti. Your birthday is on 1st April, right? Shakti is celebrating his birthday on 1st April, okay? Yes. Happy Fool's Day, da. All right. So, listen. So, the point is, no, sir. Okay, birthday ya illaya? Appadiye vandatiya? Shaktina is like an Avadara Paravi, okay? Kalki Mari. The 11th Avatar. Kalki Kapra Shakti. Okay? All right. Listen. Podum. Okay, listen. No ragging me, sir, pavam. Okay, Shaktina, romba pavanda. Okay, avaru vandu Avatar alla illa. Okay. Okay, va Shakti? Ini வேணும்னா சொல்லுங்க கொடுக்கிறேன். God comes for save us. ஆமா. All right, listen. So, the point here is, the rate is whether 30 or 25 depends upon the turnover criteria in the year 21-22. If the turnover is more than 400 crores, 30. Less than or equal to 400 crores, 25. What if you are a foreign company? What is the rate of tax for a foreign company? 40%. Rate of tax for a foreign company is at 40%. That's what the department says. Are you all with me? Now we will discuss about the surcharges. Let's understand the surcharges. What do you mean by surcharge? What do you mean by surcharge? Say for example, if you are a high net worth individual. What is high net worth individual? Like Ambani, Adani, etc. If you are a high net worth individual, over and above the slab rates, you are supposed to pay something more, which is called as surcharge. Are you with me? Are you with me? If you are a high net worth individual, then you have to pay surcharge on your basic tax as well. Now that's what we are about to discuss. So in the case of an individual, HUF, AOP, BOI, AJP, under normal provisions, then surcharges up to 50 lakh total income, you are not considered as a rich person. So there is no surcharge. Up to 50 lakh total income, you don't have to suffer any surcharge. What if your total income is more than 50 but does not exceed 1 crore? Surcharges 10%. What if your total income is more than 1 crore but less than or equal to 2 crore? Surcharges 15%. What if your total income is more than 2 crore but less than or equal to 5 crore? Surcharges 25%. What if your total income is more than 5 crore but less than or equal to, more than 5 crore, there is no less than or equal to. More than 5 crore, then surcharges 37. So I'll repeat that again. In the case of an individual, HUF, AOP, BOI, AJP, who opted for the old slab rates, up to 50 lakh total income, no surcharge. If your total income is more than 50 lakh but less than or equal to 1 CR, 10%. More than 1 CR up to 2 CR, 15%. More than 2 CR up to 5 CR, 25%. More than 5 CR, 37%. This is what your surcharge liability is all about. And there is one note under that. What is that? That enhanced surcharge liability of 25 and 37 is not applicable on 111A, 112A, 112 and dividend income. Do you remember 111A? What is that? Short-term capital gain on transfer of listed share, etc. What is 112A? Long-term capital gain of transfer of listed share, etc. What is 112? Other normal long-term capital gain. On these incomes, that enhanced surcharge rate is not applicable. That simply means maximum surcharge for long-term capital gains and short-term capital gain under 111A shall be maximum 15. Not more than that. 25 and 37 is not applicable. Are you with me? Now there is a concept called marginal relief. You should know marginal relief because it's a silent killer in exam. They will never say to compute marginal relief in exam. If there is a possibility, you have to identify and you have to compute it by yourself. So forget about the theory. Don't read the theory in margin relief. I will make you understand what is a margin relief by making use of two examples. So listen. Listen. Say you are Mr. A and your total income is say 51 lakh. Your total income is what? 51 lakh. Can you help me with this basic tax computation? How much will be his basic tax liability? If his total income is 51 lakh, his age is 40 years. I want his basic tax liability, final figure. 1,12,500. I need the final basic tax liability. Say, I am a Mr. A, my total income is 51 lakh. If you apply the old slab rate, what will be his basic tax liability? Take your calculator, compute and tell me the answer. Age is 40 years. Age is 40. Ini Aadhaar card copy venama. 13 lakh? 13 lakh 42,500. How it become 1342,500? Up to 2.5? Nil. 2.5 to 5? 12,500. 5 to 10? 1 lakh. 10 above means 41 lakh into 30% plus 1 lakh 12,500. That will be 13 lakh 42,500. Is that clear? How about his surcharge? Is he liable to pay surcharge? Yes, because his total income is more than 50 only. He is supposed to pay surcharge. Are you with me? Are you with me? How much is his surcharge? At 10%. That will be 1,34,250. Surcharge is always applied on the basic tax liability, not on the total income. Total income is the criteria for determining the rate of surcharge. But surcharge is always computed on the basic tax liability. Are you with me? Now you tell me how much is his basic tax plus surcharge? Basic tax plus surcharge. 14 lakh 76,750. Are you with me? Imagine, before computing cess, imagine a situation. Assume his total income as 50 lakh. Assume his total income as what? 50 lakh. Then if his total income is exactly 50, what would have been his basic tax liability? What would have been his basic tax liability, you tell me? 13 lakh 12,500. How about surcharge? Nil. Why? Because on exact 50 you don't have to pay any surcharge. Are you listening here? So his basic tax plus surcharge, we can say it is the same 13 lakh 12,500. Are you all with me? Now imagine a situation. His total income, if it would have been 50, it is actually 51. So how much is the increase in total income? 1 lakh. Due to that increase in 1 lakh total income, how much is the increase in tax liability? Due to that increase in total income of rupees 1 lakh, how much is the increase in tax liability? 1,64,250 is the additional income tax liability. Then that person will think that it is better not to earn that additional 1 lakh. Why? Since I've earned that additional 1 lakh, now I am supposed to pay another 64,250 from my pocket as income tax. Yes or no? If my total income would have been exactly 50, then my tax liability would have been 13,12,500. But it become 51. So there is an increase of total income of 1 lakh. Due to that increase in total income of 1 lakh, my tax increase is around 164,250. Are you with me? So department said, don't curse department. We will give you a solution for this. Do one thing. That additional income tax liability you claim as what? Relief. That extra, which is over and above the additional income, you can claim as what? Relief. How much is that extra? 64,750 you can claim as what? Relief. And how much is the amount after relief? Basic tax plus surcharge after relief. Oh, it's not 750, sorry, 250. Yeah. Tell me how much is the amount after relief? 14 lakh 12,500. Are you with me? On this you have to apply cess at 4%. And you have to compute the tax liability final. Are you all here? Now you tell me, how do you compute relief? What are the steps for computing relief? Very simple. I'll tell you some mechanical steps for you to compute relief. If your total income, if your actual total income, if it is just above, are you all listening? It's a mechanical theory, okay? This will actually help you in your examinations. If your actual total income is just above the lower limit of surcharge. How many lower limits of surcharge we have? 50 to 1 crore in that 10% bracket, lower limit is 50. 1 crore to 2 crore bracket, lower limit is 1 crore. 2 crore to 5 crore bracket, lower limit is 2 crore. 5 crore above bracket, lower limit is 5 crore. If your actual total income is just above, say we can say around 2 lakh. If it is within that 52, 1 crore to 2 crore to 5 crore to and all, then there is a possibility of what? Marginal relief. If your actual total income is just above the lower limits of surcharge, then always think about the possibility of marginal relief. Now, how do you compute marginal relief? First, you take your actual total income, compute basic tax and surcharge. Then basic tax plus surcharge you compute and get it ready. Are you with me? Don't add cess. Before adding cess, you have to adjust marginal relief. Are you with me? Then parallelly, assume your total income as the lower limit. In our example, 51, so the lower limit is 50. Then you compute the basic tax and surcharge. Are you with me? Then 50 to 51 income increase is 1 lakh. Then you check how much is the tax increase. The tax increase here is 164, 250. So how much is the relief? Tax increase, if it is over and above the income increase, that excess can be claimed as what? Relief. Because that excess which is burning from your pocket, they are saying don't pay us. You can claim it as relief. Are you with me? So here that excess tax liability is 164, 250. Excess income is 1 lakh. So over and above that 1 lakh is 64,250. That amount you can claim as what? Relief. Is that point clear? Is that point clear? I'll give you an exercise and I want all of you to compute the margin relief. Say my actual total income is 1 crore 1 lakh. Can you help me with the margin relief? Say my actual total income is 1 crore 1 lakh. Can you just compute margin relief and tell me how much is the margin relief that I can claim? Age is 40 only, okay. Age is 40 only. Margin relief, let's compute. How much is the basic tax liability? How many of you have an answer? Okay, not yet ready. Okay, do it. I can give you 2 more minutes. Okay, friends, so help me with the figures. How much is the basic tax liability? Basic tax liability 27 lakh 30,000. Is it 2730? Sure. I need the basic tax liability on 1 crore 1 lakh. 28 lakh 42,500. Then how about base surcharge 15%? How much is the surcharge 15%? 4 lakh 26,375. How much is basic tax plus surcharge? 32 lakh 68,875. Let it be there. So since your actual total income is just above the lower limit of surcharge, you are assuming that your lower limit as the total income. Now can you tell me the basic tax liability of 1 crore? 28 lakh 12,500. How about surcharge? 10% surcharge is there. 1 crore means you have 10% surcharge, and that will be 2,81,250. So can you help me with the math? 30 lakh 93,750. So how much is the increase in the total income? 1 lakh. How much is the increase in the tax liability? 1,75,125. Now how much is the relief? 75,125 is the relief, and you deduct that. How much will be the basic tax plus surcharge after relief? 31 lakh 93,750. In that you have to add 4% cess as well. How much is 4% cess on that? 1,27,750. Add everything together, and how much is the tax liability? 33 lakh 21,500 will be the tax liability. I hope it is clear. This is how you have to compute the answer. Are you all with me? How many of you got the right answers, the right margin relief? Excellent. Have you understood the concept? Have you understood the concept? Now, moving on to the next one. The next is rebate. So under normal provision, how do you claim rebate? Very simple. If you are a resident individual, if you are what? A resident individual having a total income which is 5 lakh or less, you are eligible for rebate under 87A. How much is the rebate? Either actual basic tax liability or 12,500, whichever is lower. Are you with me? You can claim a rebate if you are a resident individual having a total income of 5 lakh or less, and the rebate amount is either actual basic tax liability or 12,500, whichever is lower. And there is one more thing, rebate is not allowable from income taxable under 112A. Hope you remember. Rebate is not allowable from income taxable under 112A. Are you with me? Then along with your total income, you have to compute the basic tax and surcharge. On that, you have to apply 4% health and education cess. This is all about the old scheme. Are you with me? Can we solve a problem in relation to the old scheme? Soon after solving the problem, we will discuss new scheme, and I'll make you solve the same problem in new scheme, so that you will get a clear understanding on what exactly is the difference between old and new. Are you with me? Now first let's solve it under old scheme. This is a fantastic question. It's a study material question. It has almost all the adjustments. Chapter 6A adjustments are also there. I know that I haven't covered chapter 6A, but I'm making you solve this question based on an assumption that you know all the chapter 6A deduction, okay? If you don't know, don't worry. You try to do something. We will discuss it together, okay? So go through this question number 15. I cannot display this question in one page because it's such a small question, okay? So I want all of you to take this question from your question sheet, okay? It's a very small question. So, yeah. All right, so listen. Fine. Whether you have an answer or don't have an answer, don't worry. Shh. We'll solve it together, okay? So, listen, friends. Keep quiet and listen. Shh. We'll solve that particular question together. So we are sticking on to the old slab rates, okay? So let me read the question in full and we will do it together. Dr. Niranjana, a resident individual aged 60 years, is running a clinic. Her income and expenditure account for the year ended March 31st, 2024 is as under. So computation of, you'll write computation of total income as per old slab or old scheme, we can say. Always start from which figure? Always start from the net profit as per P&L account, that is 4,40,400. Okay, that should be the first figure. Then what is next? Rent paid includes 30,000 paid by check towards rent for the residential house in Surat. So rent paid includes how much? 30,000 paid by check towards a residential house in Surat. You tell me what to do. That's her residential on house. That's a personal expense. Can she claim personal expense as a reduction from her professional income? Is it possible? Not possible. So add back rent personal. How much is that personal expense? It is 30,000. So you have to add back 30,000. Why? Because it is already debited to the P&L account. Clinic equipments are. So when they say equipment, there is a possibility for depreciation. Yes or no? Opening is 5. And on that you can claim 15%. How about addition? It is less than 180. So you can claim 7.5%. So effectively how much will be the depreciation? 90. So the depreciation will be 90,000. Are you with me? Check the P&L account. Keep quiet. Now please don't discuss in between because I've already given you time to discuss. Okay, now keep quiet and listen. Now you tell me, is there any depreciation in the debit side? No, there is no depreciation in the debit side. So you can claim that entire amount as depreciation because they haven't claimed any depreciation. So 90,000 you can claim as what? Depreciation. Now the next is rent received relates to property situated at Surat. Gross annual value is 27,000. That is rent received. You tell me what is the treatment? It have to be deleted from the PGBP and you have to add it as an income under house property. Yes or no? So add back rent received. How much is the rent received? 27,000. You have to not add back, sorry, you deduct. Okay, not add back, deduct. You have to deduct it from PGBP and house property we will open. How much is the gross annual value? 27,000. And they are also saying municipal tax paid has been adjusted under administrative expense. So add back municipal taxes. How much is municipal tax? 2,000. So you add back it from PGBP and less it under. One second. And less it under where? Less it under house property from GAV. So 2,000 you have to less. Are you with me? Are you with me? So rent received relates to property situated at Surat. Gross annual value 27. Municipal tax 2,000 paid in December 2023 has been included in the administrative expenses. That's what the treatment we have done. We have removed it from PGP and less it from house property. So you tell me how much is the net annual value? 25. How much is the standard deduction? 30% means how much? 7,500. How much is the income from house property? Come again? Let it be there. Now, what's next? She received a salary of 7,500 per month from Full Care Hospital, which has not been included in the consultation and medical charges. So it has to be under the head salary. 7,500 into 12 months. How much will be the total salary? 90,000. From that you can claim what? Standard deduction. And how much is standard deduction? 50,000. You deduct that, how much will be the remaining amount? 40,000. Let it be there. Then she availed a loan of 5,50,000 from a bank for her higher education of her daughter. Daughter's higher education, she have taken a loan. And she repaid 1 lakh as principal and 55,000 as interest. What is the speciality? There is a section called 80E in income tax. If you have taken any loan for the higher education, either for yourself or for any family members, the interest on higher education loan is allowed as a deduction under 80E. The principal repayment is not allowed. Interest paid on higher education loan is allowed as a reduction under 80E. So what to do? You can claim under section 80E, interest on edu loan. How much is the amount? 55,000 is the interest on edu loan that you can claim as a deduction as well. Now it is not debited in the P&L account, so you don't have to do anything in relation to the PGBP. Okay, if they have debited that in the P&L account, then you have to add it back. Here they are not mentioning anything, so it is not adjusted. Now 1 lakh paid as tuition fee, not in the nature of development fees or donation to the university for full-time education of her daughter. Tell me what to do with the tuition fee. 80C. The tuition fee you can claim as a deduction for up to 2 children in India. Are you with me? So under section 80C, tuition fees of children, full-time education. How much is the amount? 1 lakh you can claim as a deduction. Then what's next? Amount of 28,000 paid by check on 27th March for a medical insurance premium. That is under 80D. Medical insurance premium. You tell me how much is deductible. Normally only up to 25,000, but here Niranjana's age is 60. She is a senior citizen and she can claim a deduction up to 50,000. But since the actual payment is only 28, you can claim that entire 28 as a deduction. Are you with me? Niranjana is actually a senior citizen, so she can claim up to 50. But since here the actual payment is only 28, she can claim only up to that 28. Now, I think this is it. From the above, compute the total income of Srimad Niranjana for assessment year 24-25 under the default tax rate and optional tax rate as per the normal provisions of the Act. So you need to compute the total income as per normal provision as well as 115 BAC. So we have computing the normal provision. Now let's have an analysis on the P&L account. So to medicine consumed is there, okay, staff salary, clinic consumables, rent paid is there, administrative expenses there, amount paid to scientific research 1,50,000. Is there any problem? No problem, it is deductible under PGBP only. So it's already debited to the P&L account. So no adjustment required. You remember section 35 outside contributions. It's already debited to the statement of P&L account and hence no further adjustment required. Then net profit is there, that's fine. Consultation and medical charges, no problem. Income tax refund. What is income tax refund? First of all, tell me what is income tax refund? What is income tax refund? See, very simple. Say the amount of tax that you have paid. If it is more than the required amount, say for example, like advance tax, TDS, TCS, you have paid more taxes, then that excess is said to be what? You will get that refund. That excess tax that you have paid in a year, you will get as what? Refund. Are you with me? Are you with me? So, excess tax that you are paying, you will get it as a refund. And that refund is not your income first of all. That is something you paid extra is getting back. But interest on refund is your income taxable under IFOS. Interest on income tax refund is an income taxable under IFOS. So you tell me what to do with this 5450. You remove it from PGBP. Because first of all, it will not have no connection with the PGBP. So you remove that 5450 from PGBP. IT refund. 5450. And how much you have to add it under IFOS? Only the interest element. So under IFOS, interest on IT, that is 450 only will become your income. Is that point clear? Is that point clear? Moving on to the next one. Dividend from UTI. It also have to be dealt under IFOS. So you remove that. Dividend, how much is the amount? They are saying gross, so it is total amount. 10,500 have to be deducted from PGBP and the same have to be added under IFOS as dividend. Then what is next? Winnings from game show. So it is a casual income. They have added 35,000 in PGBP. So first of all, you have to remove that 35,000 from PGBP. And how much is your actual income? TDS is 15,000. So you tell me how much is your actual income? 35 plus 15, that will be 50,000 is your income. So less 35,000 from PGBP and add 50K under IFOS. Are you with me? I hope you remember an example we have discussed yesterday. Net of TDS for the payee income is gross. You have to show gross as the income. So what you need to do is less winnings. How much is the amount? 35,000. You have to less from PGBP. And under IFOS, winnings 35K plus 15K, altogether 50,000. I think that's it. Rent we have already adjusted. Now can you tell me how much is the PGBP income? Can you tell me how much is the PGBP income? 304,450. Now, medical equipment, life-saving equipment only 40 it is. Normal medical equipment it's only 15, okay. It's life-saving equipments like ventilator facility or something, that is 40. Yes. So, house property, okay. House property, our income we have already computed, 17,500. Salary, 40,000. Can you help me with the total of IFOS? How much is the total of IFOS? 60,950. Now, how much will be the gross total income? Gross total income, 4,22,900. After deducting these three chapter 6A deduction, how much will be your total income? 2,39,900 is your total income. Are you with me? Please complete the answer. Those who haven't completed it, please do complete the answer. Yeah, this is it. Ready? All good. Now friends, let's understand what is the new rate. Okay. So let's discuss 115 BAC right now. So listen. Please keep quiet and listen. In the case of an individual, HUF, AOP, BOI and AJP, by default, you have to pay tax under 115 BAC. What is by default? Your default rate is 115 BAC. If you want old slab, you have to specifically opt out from 115 BAC. Are you with me? Are you with me? That simply means when you file your return, you have to show that I don't want BAC, I only want old. You have to say like that. Are you all listening? Yes, so for individual, HUF, AOP, BOI, AJP, by default it is 115 BAC. Now, so in 115 BAC, what exactly is the rate of tax? Up to 3 lakh, nil. 3 to 6, 5%. 6 to 9, 10%. 9 to 12, 15%. 12 to 15, 20%. 15 above, 30%. That is the existing liability or the existing rate. It has been amended, but that is not applicable for you. Are you with me? For 23-24 PY, this is the existing structure of the 115 BAC. That means up to 3, nil. 3 to 6, 5%. 6 to 9, 15. 9 to 12, 6 to 9, 10. 9 to 12, 15. 12 to 15, 20. And 15 above, 30. There is actually an easy way to understand this. For every 3, 5, 5, 5. From 20, it is directly to 30. For the first 3, nil. 3 to 6, another 3, 5%. 6 to 9, another 3, 10%. 9 to 12, another 3, 15%. 12 to 15, another 3, 20%. 15 above, directly jump to 30. Are you with me? Are you with me? But there are certain consequences. That means if you are a senior citizen or a super senior citizen, you will not get any extra benefit. Your basic exemption limit will be in all case 3 lakh. See, in the old slab rate, if you are a super senior citizen, you will get a basic exemption limit of up to 5 lakh. Yes or no? That is not available in 115 BAC. Whether you are a super senior or senior, whatever it is, or a junior, that means a normal person, whatever it is, your maximum exemption limit is only 3 lakh, not more than that. Is that clear? Is that clear? Now friends, listen. Say, there are certain conditions that you have to satisfy before claiming the benefit under 115 BAC, because there are certain restrictions that are applicable. So can you read this heading? Conditions to be satisfied for availing concessional rate of tax. The following are the conditions to be satisfied for availing concessional rate of tax. You have to satisfy all the following conditions for availing this concessional rate of tax, and let's understand which all are the conditions one by one in a detailed manner. And what is the first one? Can you read the first one? Certain deductions or exemptions are not allowable. The deductions or the exemptions which we are about to discuss are not allowable. Are you with me? Take a pen, and I want you to write something in this particular table. Okay, so take a pen with you and let me start discussing each and every restriction that are applicable. So listen and tell me, what is the first restriction? The following deductions or exemptions would not be allowed if assessee opt for 115 BAC. If you are opting for 115 BAC, listen, if you are opting for 115 BAC, you will not get the following exemptions or deductions. Are you all here? If you are opting for BAC, you will not get the benefit of the following exemptions or deductions. Which all are the exemptions or deduction? Number 1, 10 subsection 5, leave travel concession. Do you remember leave travel concession? Within India, that tour, then you can claim if it is an air economy fare ticket cost, then you are going by any other mode, having a train connection, first class AC fare of the train ticket. Do you remember that? That's gone. If you are opted for BAC, you will not get the benefit of 10 subsection 5. Which head it is? Which head? Salary. That is leave travel concession under salary. That simply means if you are opting for 115 BAC, that entire amount reimbursed by the employer or sponsored by the employer shall be fully taxable without any exemption. That's what it means. Are you with me? Are you with me? Moving on to the second one. What is the second restriction? House rent allowance. Do you remember house rent allowance? Which all are the limits under 1013A? Either actual HRI received or 40% or 50% of your standard salary based on the place where your house is situated, or rent paid minus 10% of standard salary, whichever is lower. Gone. The entire HRI that you received shall be fully taxable if you opted for BAC. Again, which head? Right, salary. Then, can you read the next one? Exemption in respect of special allowances or benefit to meet expenses relating to duties or personal expenses. Do you remember 10 subsection 14 clause number 1, where exemption subjected to actual expenditure? And one more thing was there, exemption which is not subjected to actual expenditure. That means fixed exemption was also there. Do you remember, like children education allowance, hostel allowance, blind, deaf or dumb, that allowance? Do you remember that? Those exemptions are also gone. You can't claim that exemptions as well. Which is the head? Salary. But you have to scroll down this, and there are certain exceptions to this. Can you scroll down and take this part? Can you read this box? While computing total income, exemption under 10 subsection 14 would not be allowed. That's what we have learned. If you have opted for 115 BAC, you will not get the benefit of 10 subsection 14 except the following. What do you mean by except the following? Even if you opt for 115 BAC, you can claim these 4 items. These 4 exemptions under 10 subsection 14. Are you with me? Even if you have opted for 115 BAC, you can claim these 4 exemptions for the allowances. Which are the 4 items? Number 1, traveling allowance you can claim whether you opt for BAC or old scheme. Then daily allowance you can claim whether you opt for BAC or old. Conveyance allowance you can claim whether you opt for BAC or old. transport allowance which is given to the employee who is blind, deaf and dumb and orthopedically handicapped with the lower extremities of body. Do you remember that up to 3,200 per month? That also is allowable even if that blind person have opted for 115 BAC. So with the BAC also these four are allowable. With the BAC, the other items under 10 subsection 14 is completely gone. Are you with me? Are you with me? So there is one note under that. Can you read that note? An individual being an employee paying tax under 115 BAC should not be entitled for exemption of perquisite of free food or non-alcoholic beverages provided by the employer through paid vouchers. Do you remember that 50 rupees per meal, that free non-alcoholic beverages thing? That 50 rupee benefit you will not get. Are you with me? That 50 rupee benefit also you will not get. That entire meal provided, that value have to be your taxable perquisite. Are you all with me? Is that point clear? Means into means. Exemption into exemption applicable. What is this? Ali Nivas, I think you, not biryani, this is more than that. Okay. Oh, what? That's what he's saying. I think it's not biryani, it's some kind of weed or something, okay? They Ali. All right. So, jokes apart, okay. So, coming back to the point, listen. Where were we? We were discussing note number 1. And there is one more note, note number 2. Exemption for allowances payable outside India is allowable. Do you remember that allowances payable outside India? Allowances payable by the Indian government to our embassy officers who are actually working outside India. Exemption. That is allowable whether that embassy officer opt for 115 BAC or old scheme, doesn't matter. Are you with me? Yes, are you with me? Yes, super. So we are talking about the allowances, and the allowances exemption. Normally 10 subsection 14 clause number 1 and 2 is gone, subjected to 4 exceptions. That means those 4 you can claim even if you have opted for 115 BAC. Let it be there. Now can you read the next item? 10 subsection 17. That is something related to IFOS. Okay. So you can write IFOS. Daily allowance or constituency allowance of MPs and MLA. You tell me, is MPs and MLA getting any salary? Are they getting any salary? Yes. And that salary will be taxable under which head? IFOS, not under the head salary. Why? Because there is no employer-employee relationship between MP and our judiciary. Not judiciary, legislature. Why? Because they are our elected representatives. They are not the employees of legislature. Are you with me? Yes, are you with me? Yes, so what we can say, all the salary received by MP and MLAs will be taxable under IFOS. But, they have a great advantage. What is that advantage? If they have any daily allowance or constituency allowance. Daily means for their daily activity. Constituency means the place from there got elected. What do you say it in Tamil? Togudi. That Togudi. Are you with me? They have constituency allowance as well. So whatever the daily allowance and constituency allowance received by an MP or MLA normally is fully exempted, subject to no conditions. Fully exempted. But if that MP or MLA opted for 115 BAC, he cannot claim that particular exemption under 10 subsection 17. That daily allowance and constituency allowance shall be fully taxable. Are you with me? Yes, so it normally comes under IFOS, income from other source. Are you all with me? Yes, are you all with me? Yes, now you tell me what is the next item. That is 1032, exemption in respect of income of a minor child includable in the total income of parent. This is related to clubbing. You can write clubbing over there. All the minors' income have to be mandatorily clubbed with the total income of the parent. That parent can claim an exemption under 1032 of 1,500 rupees per child. Have you studied this? Every minor's income have to be clubbed with the total income of their parent, and that parent can claim an exemption under 1032. And how much is the exemption? 1,500 per child. That exemption gone if the parent opted for 115 BAC. So that's why I've written clubbing. Are you with me? Now moving on to the next one. Do you remember 10AA exemption? if you start a unit in ZES for the 15 years, you will get a benefit. It does not have any connection with the head, so we can write it as a deduction. We can write it as a common deduction. That is also gone. That means if you are opening a unit in ZES and you are opting for 115 BAC, no deduction under 10 double A. Then what is next? Section 16, that is entertainment allowance and professional tax. You cannot claim any deduction. If you are a salaried employee, then for the entertainment allowance and professional tax that you are paying, you cannot claim any deduction. But you can claim what? Standard deduction. New amendment. Earlier standard deduction was also restricted. Now government say no problem. You claim what? Standard deduction. Are you with me? Are you with me? So you can definitely claim standard deduction, absolutely no problem. Are you all here? But deduction for entertainment allowance which can be claimed by the government employee, how much is the limit, do you remember? Either 20% of basic salary or actual entertainment allowance or rupees 5,000, whichever is lower, only for state government or central government employees. That's gone. Professional tax, there is no limit and all. Whatever professional tax that you pay, you can claim it as a deduction, but opted for BAC, gone. So which is the head? Which is the head? Very good. Now, do you remember 24B? Interest on loan in respect of self-occupied property. That 2 lakh or 30,000 limit, do you remember? Gone. Which is the head? House property. Only for self-occupied property, there is a restriction. That simply means if you have a let-out property, and interest on loan is fully deductible, irrespective of whether you opt for BAC or old slab. Only the restriction is for what? Self-occupied house property, don't come and claim that 2 lakh rupees loss. Not permissible. Are you with me? Read that again. Interest on loan in respect of self-occupied property is not allowable. That means let-out property, deemed let-out property, you can claim. We have no complaints. You can claim even if you have opted for BAC, but self-occupied property, we have no plans to give you that 2 lakh or 30,000 deduction. Now, moving on with the next one, what is that? Additional depreciation, gone. Which is the head? PGBP. You can claim normal depreciation, no problem, but additional depreciation you cannot claim. Then what is next? You can cross off that too. 33AB and ABA, you can cross it off, applicable only for CA final. You can cross it off 33AB and ABA because that is applicable only for CA final. Accidentally I put it over there. Okay. Now, do you remember the next one? Section 35, outside contributions. Which all are the outside contributions? You're giving anything to an association or institution or a college university which does scientific research, 100% reduction. You're giving anything to an Indian company which does approved scientific research, 100% reduction. You're giving anything to an association or a university which does social science or statistical research, 100% reduction. You're giving anything to a national laboratory or IIT for their approved programs, 100% reduction. No, you will not get any deduction. If you opt for 115 BAC, you will not get any deduction. Under which head? PGBP, gone. But one thing is there, you can claim a deduction for the in-house scientific research expenditure. That you can claim. But outside donation, deduction is not allowable. If you are opting for 115 BAC. Are you getting an idea over this topic? Now. Next one, 35AD. What is 35AD? Specified business. That means if you are a specified business, then you cannot claim the benefit of claiming 100% deduction for the capital expenditure. Not allowable. Are you with me? Don't claim 35AD deduction. If you want to claim, go for old. Coming to new, don't ask for 35AD. But you can claim another thing. What is that? Instead of claiming 100% deduction for the capital expenditure, you can capitalize it and claim normal depreciation. If you are opting for BAC. Are you all with me? If you are not claiming 35AD, then you can what? Capitalize that capital expenditure and claim what? Normal depreciation. No restriction for that. But we will not allow you to claim what? 35AD. Rather you capitalize and claim depreciation. Is that clear? The next one you can cross it off. 35CCC, not applicable for you. It's only applicable in CA final. You can cross it off. Then 80C to 80U. That is chapter 6A deduction other than employer's contribution towards NPS under 80 CCD subsection 2, central government contribution towards Agnibat scheme under 80 CCH, and deduction in respect of employment of new employee that is under 80 JJAA. So listen, if you are opting for if you are opting for 115 BAC, entire chapter 6A gone, but you can still claim 3. What is the 3 items? 80 CCD subsection 2. That is the employer contribution to NPS. 80 CCH subsection 2. That central government contribution to Agniveer Corpus Fund. Have you heard about Agnibat scheme? If you are a person in the age of 17 to 21, you can join the army. You can join the army. You will be called as Agniveer. Okay. If you are joining the army, then the central government will give you corpus fund, just like PF. Just like PF or just like the pension, central government, and from your salary also there will be a deduction to the Agniveer Corpus Fund. And the central government contribution is allowable as reduction in your hands under 80 CCH subsection 2. That is allowable, even if that Agniveer opted for 115 BAC. And finally, 80 JJAA, that is deduction for creating additional employment opportunity. These 3 allowable. Apart from these 3, no other deduction under chapter 6A. Are you with me? So listen. Not yet over. This is only the first condition. Are you all here? The following restrictions and deductions are not applicable. That is only the first condition, and we have many conditions more. Moving on to the second restriction. Can you read the second restriction? What is the second item? Certain losses not allowed to be set off. Certain losses you cannot set off. Are you all with me? Certain losses you cannot set off. Which all are the set off? Sir, tell little bit about advance tax paying if you have time. Yes, but I'm sure that I will not get time because already we are 3:45, but I'll try. Okay, don't worry. Where were we? Certain losses not allowed to be set off. Okay, let's see which all are the losses. There is a restriction. Surya, definitely I'll try. Okay, yes. So, can you read the first blue box? While computing total income, set off of the following losses are not allowed. Can you read the first point? Carry forward or depreciation from any earlier assessment year if such loss or depreciation is attributable to any of the deductions referred in point number 1. That simply means if you have any carry forward of loss due to any of the items referred in point number 1, then that carry forward item also not allowed as deduction in the subsequent year. I'll give you an example for a better understanding. Are you all listening? Say, imagine, keep quiet and listen. Imagine, say, year 1, I was a specified business. Okay, so I claimed deduction under section 35 AD. And the loss was, say, 10 lakh. How much is my loss? 10 lakh. As you all know, 35 AD business loss can be adjusted only with 35 AD profits. So what you can do is you can carry forward it to the subsequent year. Are you with me? So year 1, I opted for the old slab and there was no problem. Year 2, I opted for 115 BAC. And my profit was 10 lakh. My profit is how much? 10 lakh. My question is, can you claim 35 AD deduction in year 2? Can you claim deduction under 35 AD in year 2? No. Why? You opted for 115 BAC. You opted for 115 BAC. You cannot claim deduction under 35 AD, that is specified business deduction, not allowable. Are you with me? Are you with me? Now my question is, can you adjust this brought forward loss of rupees 10 lakh with a profit with year 2? Can you adjust this brought forward loss of 10 lakh from year 1 with a profit of 10 lakh in year 2? Answer is no. Because that 10 lakh loss is on account of an item covered under table 1. Are you with me? In year 2, you are not supposed to claim 35 AD, plus you are not supposed to adjust any loss which is brought forward on account of 35 AD. Are you all here? So moving on to point number, that restriction again. Can you read that restriction again with me? Carry forward or depreciation from any earlier assessment year if such loss or depreciation is attributable to any of the deductions referred to in point number 1. If you have any items referred to point number 1, due to that, if there is a carry forward of losses, don't even think about adjusting with your current year profits. Are you with me? Are you with me? Now, what is point number 2? Losses under the head house property with any other head of income. That simply means if you are opting for 115 BAC and having a loss from house property, don't adjust that loss with any other head of income. You carry forward that to the next year and adjust it only with income from house property. Are you with me? If you have a loss under house property and opted for 115 BAC, that loss under house property is not supposed to be adjusted with any other head of income. You have to adjust it only with the house property income only in future. Are you all with me? Yes, superb. And can you read that note? Such loss and depreciation, that is in point number 1, okay? Point 1, this one, would be deemed to have been already given effect to, and no further deduction for such loss or depreciation shall be allowed for any subsequent year. That simply means this 10 lakh loss is gone forever. In year 2, if you are opting for BAC, you cannot take that 10 lakh loss to third year. Are you with me? Say third year, you are saying that you are planning that third year, let's go back to the old and adjust that 10 lakh rupees loss. Not possible. In year 2, if you are opted for BAC, that is gone forever. It would have been deemed to have been adjusted. That's what the department says. Are you with me? Read this. Such loss or depreciation. This loss or depreciation would be deemed to have been already given effect to, and no other deduction for such loss or depreciation shall be allowed for any subsequent year. Are you all with me? Now, there is a way to understand and remember this particular thing. There is actually a way to understand and remember this particular thing. Are you all with me? Let's understand what exactly is that way. So, listen. See, if you have opted for 115 BAC, let's understand this head-wise. Okay, which is the first head? Salary. Which all are the restrictions? 10 subsection 5, leave travel concession, gone. 1013A, that is house rent allowance exemption, gone. 1014, clause number 1 and clause number 2, gone. Subjected to 4 exceptions. Are you all with me? Which all are the 4 exceptions? Travel allowance, daily allowance, conveyance allowance, and daily allowance given to that blind, deaf or dumb. Except that 4, everything is gone. Then, that food allowance, gone. That food, not food allowance, that perquisite valuation for food, that 50 rupees per meal, gone. 50 rupee per meal benefit in food valuation perquisite, gone. Now, next is entertainment allowance, gone. Professional tax, gone. Apart from this, is there any other restriction under the head salary? Apart from this, is there any other restriction? No. Are you all here? Yes, check with the table that we have written right now. Apart from these 1, 2, 3, 4, 5, 6 items, is there any other restriction under the head salary? There are no other restrictions, only this much. Are you with me? Yes, now, which is the second head? House property. What are the restrictions in house property? Self-occupied house properties interest on loan, which is under section 24B, gone. Apart from that, there can be one more. Loss from house property cannot be adjusted. Cannot adjusted with any other income. You can carry forward it to the future year. Are you with me? Then, which is the third head? PGBP. Which all are the restriction? Additional depreciation, gone. Then, 35 outside contributions gone. Section 35 outside contributions gone. Then 35 AD specified business deduction gone. Then is there any other restriction? Is there any other restriction? No. Fourth one, capital gain. No restriction. Capital gain have nothing to do with 115 BAC. Are you with me? Then, and the next one is IFOS. Which all are the restrictions under IFOS? That is number 5. That is IFOS. Only one thing, daily allowance or constituency allowance of MP MLA under section 1017 gone. Earlier there was one more restriction. See, when there is family pension, there was a deduction. 15,000 rupees or 1/3 of the family pension, whichever is lower. That restriction is not there right now. Even if it is a family pension and opted for 115 BAC, you can claim deduction. There is absolutely no restriction right now. It is not there. Now, and these are the 5 heads. Now the next is clubbing. Is there any restriction regarding clubbing? What is the restriction? 1032. Income of minor when clubbed with the total income of parent. That 1,500 per child gone. Then set off and carry forward. We can say one restriction. Any loss on account of any of these restrictions which is brought forward in year 2 cannot be adjusted with the income taxable under 115 BAC. Then what is next? Chapter 6A. Is there any restriction? Oh, everything gone. Subjected to 3 exceptions. 80CCD subsection 2, 80CCH subsection 2, 80JJAA. Subjected to 3 exceptions. Everything gone. Are you with me? This is it. This is it. This is only 115 BAC. We flipped the dosha. I told you that we will cover everything and I will make you understand just like a flipping dosha. Done. Okay, this is it. You study in this manner, you will never go wrong. You study in this manner, you will never go wrong in examination. Are you with me? 10 AA is there. That is out of this, so we can write that also. 10 AA. That's a common deduction, okay? Yes, common deduction, 10 AA. You will not get it. AMT is not applicable. We haven't covered AMT, that's why I remain silent in AMT. But it's there in the revision note. I've given it. You can flip the page. It is there. Are you all with me? And there are one more restriction. இது என்னதா அலி இதெல்லாம் song அப்படியே போட்டுட்டு இருக்க அலி. Ali seems like a very good singer. Very easy to remember now. Thank you. Okay, Selva. நன்றி சொல்ல உனக்கு வார்த்தை இல்லை எனக்கு. Is that a song? Which movie song? Old song. All right, all right. Okay. Yeah. I want something in return, Ali. This is not free. I want something in return. Give me an exemption for taxation. Okay. That's what you can do. Give me an exemption for taxation. Selva also. Preksha also, give me an exemption in income tax. That is the greatest gift that you guys can give it to me. Okay. Yes. Sure. Yes. Rangachetta mass. Idu mass allada. Joke allada. Serious ah sonne. Okay. Yes. So coming back to the point, friends, listen. And there are other restrictions also, right? I'll tell you the other restrictions. See, there is a change in the surcharge rate. That 37% is not applicable for individual HUF, AOP, BOI, AJP if you are opting for 115 BAC. What is the maximum surcharge? 25%. If your total income is more than 2 crore, your maximum surcharge is how much? 25%. 37 is not applicable for you. Then, there is something in between. AMT. If you are opting for 115 BAC, you don't need to worry about AMT. What is that? Alternate minimum taxes. Next change is rebate. What is the rebate under old scheme? No. What is the limit for the rebate under old scheme? Rupees 5 lakh. Here it is 7 lakh. Up to 7 lakh if your total income, you can claim a rebate. And the rebate is either 25,000 rupees or actual tax liability, whichever is lower. Are you with me? Yes, are you with me? Yes, That is when it comes to the tax liability, these are also applicable. Now, let me make you solve the same question that we have solved earlier. That is Niranjana question. Read the same question and compute the total income under 115 BAC. Read the same Niranjana question and solve it under 115 BAC. Will tax refund received will be, that's an income, Prem Kumar. You don't have to disallow it, okay? That's actually an income, receipt. You don't have to disallow it. Maunika, if unabsorbed depreciation from PY contains additional depreciation to the extent not allowed, that is only in the AY 2021, not now. That note is not now, okay? That is only for AY 2021. We haven't disallowed it, okay? See, we haven't disallowed it. What we have done is, it is not a taxable income. So we have removed it from the PGBP, okay? Since it is not our taxable income, we deducted it from PGBP. Why? Because you have credited it in your P&L account, right? You have credited that entire thing in your P&L account. So you have removed it from the P&L account, that's it. It's not a disallowance. You have credited mistakenly it in your P&L account and we have reduced it from the P&L. Got it? Done? Finished? So shall we solve it together? How many of you have an answer? Please raise your hands. All good. So, listen. What you can do is, say, we'll start from the net profit, okay? I'm not writing detailed steps, okay? I'm not writing detailed steps. Shh. I'm not writing detailed steps. Quickly I'm finishing this off. Are you with me? So, do you remember our last calculation? Do you remember the last calculation? As per the last calculation, how much was the total income? How much was the total income? 2,39,900. I'm starting from that figure. I'm starting from that figure. Say total income as per old scheme. 2,39,900, right? First of all, add back all the chapter 6A reductions because not permissible. Not permissible under section 115 BAC. Are you with me? Which all are the items? ATC. How much was our ATC? 1 lakh. How much was ATD? 28,000. How much was our ATE? 55,000. You add back these three first. Then, yes, you can do this because first of all, you don't have to compute both in when you file your return actually. So this is actually an exceptional situation created by the ICAI. So what you can do one in a proper manner, then the other you can do on a comparative basis by writing notes. That is more than enough. Are you with me? Now what are the other restrictions you have? So listen, and the greatest advantage that we have in BAC is we don't have an extra deduction under BAC. Are you with me? We don't have an extra deduction. We only have restriction. Are you with me? That's why the flipping dosha is easy. Otherwise, it will be a little bit confusing. Are you with me? You don't have an extra deduction. So what you need to do, you need to check the other things. Rent personal, no adjustment. Depreciation, no adjustment. Rent received, no adjustment. Municipal tax, no adjustment. IT refund, dividend, winnings, no adjustment. Then, when it comes to the house property, no problem. municipal tax no problem, NAV no problem, standard deduction no problem. Salary no problem. You can claim standard deduction, so absolutely no problem. IFOS interest no problem, dividend no problem, winnings no problem. Then there is one thing. Wait, okay. Wait, let me complete this. Let's go to the what? P&L account. In the P&L account, medicinal consumed, staff salary, clinic consumables, rent paid, administrative expense, amount paid to scientific research approved under section 35 is actually an outside contribution under section 35. Yes or no? What to do with this 1,50,000? Add back, because you will not get deduction under 115 B, A, C. So what you need to do is you need to add back outside contribution that is, how much was the amount? 1,50,000, right? 1,50,000. Now check the other items. Net profit is there, consultation, IT refund, dividend, winning, rent. There is nothing more to do. Can you tell me how much is the total income as per 115 BAC? 5,72,900. Done. Are you all with me? Are you all with me? That's it. Let's solve one more question, okay? Have you completed this, or have you clicked a picture or something? Done. Now I will make you solve a fantastic question. That's actually a 14-mark question, May 2022. So go read this question and give me the answer. 16-mark question it is. Sorry, 14-mark question, question number 16, May 2022. May 22 or 23? 22. Mrs. Nisha, a resident individual, aged 54 years, is carrying on the business of manufacturing of textile, fabrics. So manufacturing it is. So there should be a possibility of additional depreciation. As a proprietor, and the turnover for the PY 22-23 was 250 lakhs, and in the current previous year 23-24, it is 600 lakhs. The net profit as per the profit and loss account as on 31st March 24 is 5,61,000. So we need the net profit, 5,61,000. She provides the following additional information. Those were not considered while making the profit and loss account for the previous year 23-24. So listen, the following informations are not considered in the P&L account. That's what they are saying. Are you with me? Are you with me? So it's a kind of another variety. So normally they would have given the P&L account. Then we adjust, adding it back, deducting and all we used to do. Right now what they are saying is, the following items are not considered in the P&L account. Are you with me? What they are saying is the following items are not considered in the P&L account, and you need to do the needful. So what is the first item? Depreciation has not been debited to the P&L account, and the details of the plant and machinery employed in the business have given. So depreciation, we will write a working note. How much is the opening WDV? 4,75,000 is the opening WDV. Is there any addition? Yes. How much is the addition? Which is more than 180. More than 180. Even though the value is 7,25,000, under that there is another note. Received a subsidy of 20% on the new machine purchased on 3rd July 23 during the PY under Technology Upgradation Fund Scheme from the central government. So he received a subsidy. So when you add actual cost, you have to net off that subsidy. Are you with me? Because you don't have to spend 7,25,000 for acquiring a plant and machinery. You only need to spend how much? 80% of it. So how much is 80% of 7,25,000? 5,80,000. 5,80,000. So adding these two, how much will be opening plus addition? 10,55,000. Is there any deletions? How much is the sales? 75,000. So can you help me? How much is the remaining value? 9,80,000. Into what rate? 15% is the normal depreciation. Can you help me with the normal depreciation? 1,47,000, round figure. Now you can claim additional depreciation. On what value? 5,80,000 into 20%. How much will be that? 116. So all together, how much will be the depreciation figure? 2 lakh 63,000 will be the total depreciation, including both normal as well as additional. Are you with me? Are you with me? So you have to deduct that 2 lakh 63 as depreciation. So where is it? Yeah. Depreciation under section 32, 2 lakh 63. Deduct. Then what is next in the question? Item number 2. Item number 2 we have already done. She paid a job charges for value addition on the fabrics 90,000 without deduction of tax to job worker by an account paycheck. What to do? Only 70% deduction allowable, 30% disallowed. Are you with me? So these items are not considered in the P&L account. That's what they are saying. Are you all here? So actual amount paid. How much is the amount paid? 90,000, right? And disallowance. How much is disallowance? 30%. How much is 30%? 27,000. How much is the remaining amount? 63,000 you can claim as a deduction. Are you all with me? So depends upon the question, the way you adjust also differs. If you miss that adjusted in the P&L account sentence, then you will do the reverse. Are you with me? That's how tax is. It's so sensitive. You have to carefully read the question. If I make a small change in the question, the answer entirely differs. If I crossed off that following items were not considered in the P&L account, you will get an altogether different answer. Are you with me? Are you with me? Now listen. What is next? Just dip working. Yeah, this is the dip working. Come again? Yeah, keep quiet and listen. What is next? Commission paid to one agent allowed as deduction in the earlier assessment year, 50,000, now has been received back during the 23-24 from agent due to settlement with commission agent. So, commission amount, you claimed it as a deduction last year. Now you got it back due to some settlement. You tell me what to do. Add back income, because last year you claimed it as a deduction. Now this year you got it back. So it is just like a recovery of deduction that you have already claimed. It is considered as your deemed income. And which is the section? Section is 41. Okay, deemed income. Deemed income in PGBP. This is basically section 41. And how much is the income, friends? Can you tell me how much is the income? 50,000. Now, what is next? 25,000 paid to creditor for goods in cash. Is that a problem? Of course a problem. Which section disallowance will come? 40A3 disallowance will come. Are you with me? And don't deduct anything. Only write disallowed under 40A3 since the payment is made otherwise than by way of account pay, check, account pay, bank draft, TCS or prescribed electronic modes, and hence you have to add it back. You don't have to add it back. Don't adjust, because these items are not adjusted in the P&L account. Are you with me? If you simply skip that, you will not get marked. You have to write a sentence. Due to this, we are not adjusting. Are you with me? What is next? Incurred a loss of 1,17,500 from eligible transaction carried out in respect of trading in derivatives and recognized stock exchange. What to do? Capital or PGBP? You take the revision note, takes the first page in PGBP. Take the revision note, first page in PGBP. What's the page number? First page in PGBP revision note. 21. Take page number 21. Under speculation loss, I make you write certain things. What is that? Trading in derivatives, trading in commodity derivatives, etc. not regarded as speculative transaction, considered as normal business only. Are you with me? So what is this? Loss from eligible transaction carried out in respect of trading in derivatives. You tell me what to do. Normal business loss only. It's not capital gains. It's not speculation. Normal business loss only. But you have to show it as a separate business. Because you have different businesses, you have to compute it separately. Show it as a separate business, then net it off. Are you with me? Show it as a separate business, then you compute the profit from textile business, then you net it off. That is the correct treatment. Are you with me? So, this is textile business. And we will write trading in derivatives. It's a loss. How much is the loss? 1,17,500. That is a loss. After computing profit from textile business, you can adjust it. Now what is next? Interest received amounting to 2 lakh duly authorized by partnership deed in Messrs. Ramji Textiles at 15% annum on capital employed, and she is a sleeping partner in Ramji Textiles. Tell me, what's the treatment? The first day, PGBP, I have made you solve a question as well as I've given you a detailed note as well as I've told you this has been tested in May 2022. I'll make you solve this adjustment in the last day. This is the last day. Are you with me? Let's see. Imagine for the partnership firm, here Nisha is a partner of a partnership firm. Yes or no? Yes or no? What is the amount of interest paid by the partnership firm? 2 lakh. That 2 lakh is 15% of something. 15% on capital. Are you with me? But you can claim a deduction. Partnership firm can claim a deduction only up to 12% of capital. So how much is 12% of capital? 2 lakh divided by 15% into 12%. How much is that? 1,60,000. So only 1,60,000 is considered as interest on capital. And how about the rest 40,000? That rest 40,000 will be treated as share of profit. This is what I taught you that day. With a similar kind of example, even more complicated, we have done this. Are you with me? Now you tell me, if you are a partner of a partnership firm and receiving interest on capital, normally that interest on capital is taxable under section 28. But that interest on capital should be claimed as a deduction by the partnership firm under 40B. That amount only will be an income taxable in the hands of partner. The rest will be treated as a profit share and it will be exempted under 10(2)(a). So here the 40,000 will be exempted in the hands of Nisha under 10(2)(a). And this 1,60,000 will be taxable under section 28 as well. Are you all with me? Is that point clear? Is that clear? So you have to write a similar working note in your exam. Okay. You have to write a working note, something similar to this. You don't have to draw a chart and all, but you need to communicate the point. Are you all here? So we can write only 1,60,000 will be taxable under 28. So under section 28, 1,60,000 only shall be taxable. Are they asking us to compute BAC or normal? Normal. Ignore the provisions of 115 BAC. So you don't have to compute the BAC. We need to compute only the old slab. So moving on with the next adjustment. What is the next adjustment? Interest. She received 60,000 premature withdrawal from deposit including interest 5,000 in post office time deposit eligible for deduction under 80C. Listen, imagine, I hope you remember this from your chapter 6A deduction because we haven't covered chapter 6A. Listen, say if you are a person deposited any amount in 5-year post office deposit, then amount invested allowed as deduction under section 80C. Have you studied this? If you are depositing anything in either 5-year post office deposit or a 5-year time deposit of a scheduled bank, then you can claim that invested amount as a deduction under 80C. Are you with me? What is this 5-year deposit? For the next 5 years, you are not supposed to take it back. What if you have taken it back? No deduction because you have already claimed deduction in the year of deposit. Say in 2nd or 3rd year, I have withdrawn that amount. Okay, then what will happen? Add back that deducted amount as an income under IFOS. These items will come under IFOS. Are you with me? It's a kind of a deemed income, not under PGBP, but under IFOS, under residual clause. Are you with me? And at the time of premature withdrawal, how much is the total amount? 60,000 is the total amount on account of the premature withdrawal. In that 60,000, 55 is principal and 5,000 is interest. Entire 60 shall be taxable under IFOS. 5,000 interest anyway is taxable under IFOS. 55,000 principal is also taxable. Why? Because it is a premature withdrawal. Are you with me? Are you with me? So what you need to do, you have to open IFOS, premature withdrawal from 5-year post office savings deposit. How much is the amount? Altogether 60. 55 plus 5, altogether 60. Are you with me? No. That interest you will not get. Because for claiming ATTT, it has to be a post office savings bank interest. This is basically a deposit interest, like a time deposit interest. For that, if you are a senior citizen, you would have get ATTTB, but this is not possible. Yeah. Are you all with me? Are you all with me? Have you understood what I did? 5-year deposit should be 5-year. You are withdrawing it, then that withdrawal will be a deemed income in the year of withdrawal. Okay. After 5 years you withdraw, no problem. Only that interest element will be taxable. Before 5 years, if you withdraw, then there will be a kind of a penalty. Yeah. Yeah, this is the one. Share of profit, where was that? This is the one for share of profit. Okay. Now what is the next adjustment? Oh my God. Where were we? Premature withdrawal, right? Now next one, she sold her gold bracelet. Okay, fantastic. She sold her gold bracelet. Jewelry used for her personal purpose on 1/5/23. So it will be under capital gain. So we'll write capital gain. Full value consideration. How much is the full value consideration? 5 lakhs. Now, which was acquired for 40,000 in 2007. So cost of acquisition is 40,000. You can index it. How much is the index number? In the year of transfer, it will be 348. And how about in the year of purchase? It is 2007-8, that is, sorry, 6-7, that is 122. Can you help me with the index cost of acquisition? 1 lakh? 19,000? Now there is cost of improvement. You have fixed some diamond or something to that. In 2009, that is 50,000 into 348 divided by 148. So can you help me with the math? 560? You deduct these two, how much will be your capital gain? Two lakh 68,334 will be your long-term capital gain. Let it be there. So what's next? She received a gold coin worth 55,000 from her cousin during the previous year. So gold coin worth 55,000. Is there any problem? Yes. Under section 56 subsection 2 clause number 10, you have received movable property having a value of more than 50,000. So that entire 55,000 shall be fully taxable. Today morning only we have studied that. Are you with me? Now, listen, what is the next item? She incurred long-term loss from sale of share of an Indian company and the STT is paid on the sale and purchase of the shares. There is a long-term loss from sale of shares of an Indian company. That is a listed company. Under which head it will come? Under section 112A. It is a long-term capital loss. How much is that loss? 75,000. Can I ask you one doubt? It's a long-term capital loss. Can you adjust that long-term capital loss with a long-term capital gain of 268,334? Yes, no problem. If it was a short-term capital loss, then you cannot adjust that particular loss with a long-term. Sorry, if it was a short-term capital gain, then you cannot adjust that long-term capital loss with short-term capital gain. You can only adjust long-term capital loss with the long-term capital gain. So here you can definitely adjust. And can you tell me how much is the net? 193,334. Good. Moving on to the next one. What is next? She deposited a sum of 50,000 with Life Insurance Corporation of India every year for the maintenance of her mother aged 70 years dependent upon him and suffering from severe disability. That will be DD, ATDD, dependent disabled. DD means what? Dependent disabled. And there is one more thing, 80U. You yourself have the disability, the deduction will be under 80U. Income Tax Department is saying you are the disabled. Take deduction under U. DD means your dependent is disabled. So DD, dependent disabled. I don't know whether they are intending that. Anyways, we are saying like that only. Are you with me? Because when they introduce the annual budget and all, they will never say like this. You disability, you. DD means dependent disabled and all, they will not say. This is our, not interpretation, karpane. What is that? Imagination, yeah. So, 80DD you can claim a deduction. So deduction under section 80DD. How much is deduction? It's a flat deduction, 1,25,000. If your disability is severe, your deduction shall be 1,25,000. If it is not severe, 75,000 irrespective of the actual expenditure. Are you with me? Moving on. She purchased a new residential house during the previous year and paid stamp duty and registration fee fee 155 to transfer the property in her name. So it is basically stamp duty charges and registration fee. You tell me what to do with the stamp duty charges and registration fee. 80C. Under 80C, including stamp duty charges, registration fee and principal repayment of housing loan. Everything is covered. If you are buying a property, principal repayment of loan is covered under 80C. Like that, in the year of purchase of a house property, if you are incurring any stamp duty charges or registration fee, that also is allowed as a deduction under 80C, but the maximum deduction under 80C shall be 1,50,000. So 1,50,000 shall be the maximum deduction. Are you with me? Even though you have expended 155, you can claim only 1,50,000. Then, I think that's it, right? Is there anything else? You are supposed to compute the total income and tax payable. You need to compute the tax payable. Let's compute the tax payable. Can you help me with the PGBP? How much is the profit? How much is the profit from normal textile business? 4,45,000. Is it right? Okay. Now, from that you can deduct that trading derivative, that loss. Okay. Trading derivative loss you can net off. And how much is the net income from PGBP? Net from PGBP. 27,500. IFOS you have, how much is the total under IFOS? 1,15,000. 50 or 15? 15. Then capital gain, how much is the amount under capital gain? 193 that we have already computed. Yes or no? Capital gain 1,90,000 we have already computed. Then, how much is the GTI? Can you help me with the GTI? 445 profit, sorry, not that. Net profit is 327, 115 under IFOS, 193 under capital gain. Can you help me? How much is the GTI? 6 lakh? 35,000? 634. 834. Okay, will not work. 834. And chapter 6A deduction, you have two deductions, one 80C and other one 80DD. 80DD is a flat deduction. Even though your actual investment is some, how much is the actual investment? Under 80DD, 50,000 or something, you can claim up to 125. It's a flat deduction, 80DD. You have to refer it. Now, can you help me? How much is the total income? 3,60,834. This is the total income. Not yet over. You have to compute the tax liability. Let's compute the tax liability now. You have to divide this into two. Number one, long-term capital gain under section 112. Taxable at 20%. How much is that long-term capital gain? 193, 334. Then how much is the other income? Other income means 360, 834 minus LTCG, that is 1,93,334. And how much is that amount other income? 1,67,500. This will fall to the slab. And how much is the basic exemption limit? Basic exemption limit, what is this age? Normal age, right? So 2,50,000. And can you tell me how much is the unexhausted basic exemption limit? 82,500. Unexhausted basic exemption limit is 82,500. So you can claim that 82,500 unexhausted basic exemption limit from here. And how much is the remaining amount? 1,10,834. Now, can you claim the benefit of rebate? Yes, yes. Because your total income is only 3,60,000. You can claim rebate from 112. You cannot claim rebate from 112A. This is 112, so you can definitely claim rebate. First of all, compute the basic tax at the rate 20% on 1,10,834. Can you help me with the math? Come again? 22,167. How much is rebate under section 87A? 12,500, or actual basic tax, whichever is lower. And how much will be the basic tax after rebate? 667. Cess will be at 4% on this. How much is 4%? 387. So how much will be the tax liability? 10,054. That is the final answer. Now, friends, tips and other things, okay? Before we close off, let me give you some tips. Listen. See, first of all, our revision session, my target was covering important topics under 5 heads and making you understand what is BAC and old slab rate. That was the target, and successfully we have completed the target, okay. I've completed that entire 45 pages within the allotted 4 days time, okay. Even though we started, we only have 4 days, I had a plan. So that's why in the very first day itself, we were pushing a little bit, okay. So that towards the end, it won't be that pressure. Towards the end, I don't have to rush or run. I think I was not that rushing. In between, I was rushing, but in between, I was slowing down also. And see, is this enough? My personal opinion is you have to study everything. But this will definitely give you a push. That was the main purpose of the revision, okay? That was the main purpose of the revision. This will definitely give you a push, that's for sure. Because we have covered most of the things. You yourself, chapter 60 and all we haven't covered. But you can, when you start solving the past exam questions, you will get a push. Definitely you will get it. Because that much topic we have covered. Okay, that much topic we have covered. And I've made you solve some questions also. Like around past exam questions is around, how many questions were there? 16 past exam questions plus I made you solve some questions from the institute study material also in between. Okay. So now the one thing that you have to do is how to study income tax. How to study income tax. See, what I always say to my students are, in studying income tax, see, don't by heart the provisions, okay? Rather than simply by heart the provisions, you simply go through your theory material, whatever it is. You might be using some theory material. Whatever it is, you go through that particular theory material. Understand the concept. Read the theory material, understand the concept. Then you start solving the questions. You start solving the questions. See, I will tell you the very idea of creating these two books. Our first version book was around 600 pages or something, 400, 500 pages or around 600, something under 600 pages were there. That was the original book I had. But the main problem when you go through that particular book is what? Do you really think that you will be able to complete 600 pages theory book 1 or 2 or 3 times before the exam. Impossible. Impossible task it is. So our original book, what I did is like, I've made it to a small book, and this book carries only 129, or I can say 130 pages only. This book is only 130 pages. You can check it your institute study material. Everything is there. Everything is there in a very crisp and clear manner. I haven't added any is, was, there, blah, 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 things is not there. This is like, its summary is the summary material. Okay, this is like the full book, and summary of this is your revision note actually. See, what I normally say, I normally give this to my regular students, and I usually say that this book will actually help you in how, very simple. See, the last day before the exam, you have only 1 day break in between, or if you are so lucky, you will get 2. That's it. Okay, if there is some public holiday or something in between, you will get 2. Otherwise, you will only have that 1 single day. You really think that you will be able to complete everything in that 1 day? Impossible task. If you read a 500, 600 page book, you will never get time to revise that particular book just before the exam. So what you need to do? You need to act smart. How do you act smart? See, use some kind of revision materials like this, plus you have to do one more thing. You have to solve as many as questions you can. But how many times? Say we have a workbook also for that. Okay. But the problem with the workbook is what? The theory book, workbook is almost 3 times that of the theory book. This I cannot summarize, okay? I cannot summarize workbook, okay? If I summarize workbook, then what is the very purpose of workbook, okay? Workbook we have around, it's actually around 500 questions we have. We have around 500 plus questions covering around 25 plus past exam papers. This covers around 25 plus past exam paper, including RTP, okay? 25 plus past exam papers, plus important MCQ questions, plus study material important questions as well. This is fully amended and fully updated, but there is a problem. Say you have this book. You tell me how many times you have to finish this book, how many times you have to revise this. This is around 600 pages, okay? No, around 400 pages. You tell me how many times you have to finish this book. I'll say 3 times you have. You have to complete this book thrice, but impossible. Mudiyadu. Impossible task. Mudiyadu. Then what is the alternative? Skip this and refer something else. No, there's an alternative. What is the alternative? Very simple, I'll tell you. See, complete the theory first. You complete the theory first. Then what you can do is, take one chapter. Say you complete basic concepts. This is chapter wise. And every chapter, every question under that I've mentioned, whether it is an RTP or this is an abstract of that. This question is only taken from the workbook. Just like this, May 2022 14 mark. I've mentioned the attempt as well as the mark weightage. Okay. Listen, what you can do is, when you solve a question by your own, you will definitely get stuck. After completing the theory, when you start solving a question, you will definitely get stuck. Appudita irukano, stuck agano. Then what do you need to do? Open the theory book, read the theory, or open your study material, whatever it is, read the theory, come back and solve the answer. Again, if you are not able to solve the answer, just look at the answer. Okay, you will understand when you look at the answer, okay? Even that, after that, you are not understanding, then you have some problem. It will not be like that, don't worry. So when you look at the answer, you will understand that. What you need to do is, that concept that you missed, you take a piece of paper, write in that, in your own language, either in Tamil, Telugu, Kannada, Marathi, whatever it is, Malayalam, whatever it is you write, or English, whatever it is you write. Don't write everything. Write in 2 or 3 sentences, you have to write it. Are you with me? Likewise, you need to complete this book at least once. You need to complete this workbook at least once. When you complete this, wherever you make a mistake or wherever you get stuck, write that particular theory or write that particular concept to your paper. That paper will become a 10-15 small bundle. It will be like a 10 paper, 15 paper bundle for you. Are you with me? Are you with me? Yes, I'm not saying that this will not take a lot of time, but it will not take that time. Okay, it will take some time, but it's a learning too. After completing this workbook, wherever you have made a mistake or wherever you have a confusion, that is there in that 15-20 piece of paper. Are you with me? This is how you filter things. So just before the exam, you revise that paper. Once you solve this book, then throw this away. Don't throw it away. You keep it somewhere else, okay? Don't throw it away. Don't take it literally, okay? Once you solve this book, then you keep it somewhere. Then don't take it. Now you need to finish that particular piece of paper, that 5-6 paper you have. That 5-6 paper, if you revise, that will be revision of this particular workbook. Because you have learned a lot of theory. You have already solved a lot of variety of questions. Now when you solve this workbook, I'm say in a question, say 80% adjustments you will be familiar. 20% adjustments, maybe in the first 2 questions it will be 20%. In the last question of the chapter, it may be 1% or even nothing. You add that to that particular paper, and towards the end, just before the exam, revise that particular paper, and that will be a revision of the workbook. That itself will give you a good score in your exam. Are you with me? Are you with me? In all problem paper, you can use this. In all numerical problem paper, yeah, it's a perfect timing because my tab is switched off. Okay. No, so in all problem paper, you can do this. Are you with me? Are you with me? This will actually save your a lot of time, and this will actually help you to revise properly, and this will boost your confidence when you write your exam. Are you all here? Rather than this, simply don't by heart the section number, simply don't by heart the provision, and remembering section number is not that required. If you know it is good, but rather than that, you know the concept and you should be able to write it in the exam. That is even more important. Are you with me? So all the very best, friends. Go write your exam with confidence. Clear? Let's meet in finals. There is something happening in online. Okay.
To purchase recorded lectures and textbooks, visit our website www.cajoskorean.com.